Hello everyone. Many of the personal protective equipment or PPE manufacturing companies in India are unlisted and private limited companies. In this video, we will see the top 10 listed PPE kit manufacturing companies in India. I have shortlisted these companies based on various technical factors, current news, and estimating future potential based on their past performance and current market price. Don't miss a single frame in this short and informative video. Make sure to click the subscribe button and hit the bell icon for notifications. We live in strange times considering the current COVID-19 pandemic. Its magnitude, resilience, and rapid transmission, demand for PPE is created overnight. PPE includes any equipment that protects an individual from health or safety risks. In an industrial setting, it includes headgear, eye protection, visible coating, and safety footwear. In a healthcare setting, it includes head covers, fluid-resistant surgical or N95 masks, disposable gloves, long-sleeved fluid-repellent gowns or aprons, eye goggles, face shields, etc. PPE becomes even more important in the healthcare setting. It is estimated that one person having COVID who has admitted in hospital, and to treat him until his recovery stage, it requires around 20 PPE kits. It is a normalized number for a doctor as he treats multiple patients. Now imagine the requirements for other staff. As per the reports, the PPE market may hit $92.86 billion by 2027. India became the second largest producer of PPE kits. Recently, the center allows the export of PPE kits, and they are out of essential list items to enable exports. However, still the availability of PPE kits yet a significant issue in Indian hospitals owing to an increased number of cases locally. Let us see the companies in this segment which have the potential to gain much in the future. Company number 1. This company has a market cap of 166 crores with a dividend yield of 0.76% and the current market price at rupees 262. It has the last year compounded sales growth negative at minus 4.19%. However, perishing well in profit growth at 19.99%. Return on equity at 17.36% and stock price CAGR is 5%. Its 52-week high and low are at 285.60 rupees and rupees 132.85 respectively. Its revenue growth and profit growth over the years is promising. Promoters are holding 73.8% of the listed shares and there is no share pledging. Excellent 5 years EPS growth and return on equity are the strengths of this company, whereas the company has a high debt equity ratio. The company name is Mallcom India Limited. It is India's leading PPE brand. Having a presence in more than 50 countries, Mallcom has established itself as the integrated manufacturer and distributor for head-to-toe protection and is a valued partner for major importers in their brand name. All Mallcom products being delivered throughout the globe carry required certifications. Mallcom has captive test labs in each of its production units that manage standards and ensures quality. Company number 2. This company has a market cap of 881.64 crores with a dividend yield of 5.87% and the current market price at rupees 34.05, compounded sales growth at 3.18%, return on equity at 7.7%. However, profit growth and stock price CAGR are negative. Its 52-week high and low are at rupees 64.85 and rupees 19 respectively. Its revenue growth, profit growth and dividend growth are negative. However, profit growth over 12 years is positive. Promoters are holding 44.6% of the listed shares and there is a share pledging of 0.2%. It has excellent 5 years free cash flow and dividend yield. These are the strengths of this company. Whereas the company has a high debt equity ratio, low current ratio and a drastic decrease in EPS. The company name is Arvind Limited and it is engaged in manufacturing high-end superfine fabrics. Arvind is a US $1.7 billion conglomerate. Manufacturing PPE kits is a part of its personal protection segment. Arvind's website and its PPE products can be seen here. It is selling one PPE piece at rupees 900. Arvind's Ranchi unit gets appreciation from local administration to Niti Aayog for its products. Company number 3. This company has a market cap of 9,086 crores and the current market price at rupees 41.1. It has a compounded sales growth at minus 39.2%. However, perishing well in profit growth at 73.25% and stock price CAGR at 1247.54%. Its 52-week high and low are at rupees 61.4 and rupees 1.36. Its revenue growth is negative. Promoters shareholding at 6.2%, which are entirely pledged and so effectively at 0% shareholding. Positive in this company is the decrease in the debtors days from 156 to 26 days. Negatives are current ratio and interest coverage ratio are low. More than 5% shares has been pledged and the company has incurred losses in the latest financial year. The company name is Alok Industries, and it is the India's largest fully integrated textile company with a dominant presence in the cotton and polyester segments. It has abundant capacity to support the high quality PPE material. Reliance Industries, being its promoter, diverts Alok Industries for making PPE. It says it will cut the cost to 1/3. Capacity has been scaled up to produce more than 1 lakh PPE kits per day. Cost has been slashed to nearly rupees 650 per unit from about rupees 2000 of the imported price. Company number 4. This company has a market cap of 21,981 crores with a dividend yield of 5.87% and the current market price at 19,504 rupees. It has last year compounded sales growth at minus 1.56%, profit growth at minus 32.21%, stock price CAGR at minus 11.06%. However, return on equity is positive at 19.02%. Its 52-week high and low are 25,208 and rupees 15,685 respectively. Its revenue growth and profit growth are positive. Promoters shareholding at 75% and there is no share pledging. It has excellent EPS growth, return on equity, free cash flow and very low debt are the strengths of this company, whereas the company has a high PE ratio. The company name is 3M India Limited. It is an MNC having 93,000 employees in 87 countries and active in manufacturing PPE kits, masks and other elite products. 3M's website highlighting its PPE products are as shown. Company number 5. This company has a market cap of 3,265 crores with a dividend yield of 3.08% and the current market price at rupees 32.5. It had last year compounded sales growth at 3.29%, profit growth at 2.82% and return on equity at 14.49%. However, stock price CAGR is negative. Its 52-week high and low are rupees 59.4 and rupees 18.3 respectively. Its revenue growth, profit growth and dividend growth are negative. However, their 5 years growth metrics are positive. Promoters are holding 68.9% of the listed shares and there is no share pledging. The company has a good return on equity track record at 3 years, ROE 19.4%. Negatives are debt equity ratio is high, current ratio is low, promoter holding has decreased over last 3 years by 4.59%. The company name is Welspun India. It is the global textile force with innovation leadership and strong consumer focus. It has entered in the PPE kits manufacturing and producing around 50,000 kits per day. Welspun India website and its PPE products can be seen here. Company number 6. This company has a market cap of 3,312 crores with a dividend yield at 5.54% and the current market price at rupees 6.5. It had last year compounded sales growth at minus 9.93% and profit growth at minus 8.39%. However, stock price CAGR and return on equity are positive. Its 52-week high and low are at rupees 8.45 and rupees 3.05 respectively. Its revenue growth, profit growth are negative and dividend growth is positive. However, all these metrics are positive at 5-year period. Promoters are holding 71.1% of the listed shares and there is no share pledging. Positives are the free cash flow has grown considerably in the last 5 years. Excellent 5-year EPS growth. Dividend has also grown along with profit. Dividend yield is very good. The negatives are debt equity ratio is high, current ratio is low and return on equity is mediocre. The company name is Trident Limited. It is the flagship company of Trident Group, a USD 1 billion Indian business conglomerate and a global player. It entered into the PPE kits manufacturing in this quarter. Trident website and its PPE products can be seen here. It is producing 10,000 kits daily. It hired 500 professionals for aggressively pushing the e-commerce of these products. Company number 7. This company has a market cap of 176.16 crores and the current market price at rupees 74.8. It has last year compounded sales growth at minus 6.45%, stock price CAGR at minus 47.14% and return on equity at minus 4.97%. However, profit growth at 106.2%. Its 52-week high and low are at rupees 145.9 and rupees 55 respectively. Its revenue growth is positive, promoters holding at 53.2%, FIIs at 2.4%, and there is no share pledging. The positives of this company are it has reduced its debt, and the negatives are debt equity ratio is high. Company incurred a loss in the latest year. The company name is RSWM. It is one of the India's largest textile manufacturers. RSWM, the flagship company of L&J Bhilwara Group, it is now into reusable PPE kits, unlike others who are manufacturing disposable PPE kits. It announced that it has signed a strategic technology partnership with Switzerland, HEIQ, to offer anti-COVID-19 fabric. This fabric can be used for the reusable PPE kits. RSWM said that it is targeting 20% of its sale in this fiscal for this PPE fabric. Company number 8. This company has market cap of 3,855 crores with a dividend yield of 2.61% and the current market price at rupees 670.25. It has compounded sales growth at -2.08, profit growth at -20.96% and stock price CAGR at -35.58%. However, return on equity is positive at 12.39%. Its 52 weeks high and low are at 1105.35 rupees and rupees 592.90 respectively. Its revenue growth, profit growth and dividend yield are positive. Promoter shareholding at 62.2% and there is no share pledging. The positives for this company that the stock is trading at 0.64 times its book value. The negatives are it has delivered a poor growth of 2.34% at 5-year basis and a dividend payout low at 12.16% of profits. The company name is Vardhman Textiles. Vardhman Group has come up with a special range of functional fabrics. The antimicrobial properties and softness of these fabrics make it ideal for manufacturing PPEs and face masks. This fabric collection is customizable, eco-friendly and reusable, thereby ensuring the safety and comfort of the user. Vardhman Textiles websites and its PPE products can be seen here. It is having the DRDO approved PPE kits manufacturing line, producing more than 50,000 PPE kits per day. Company number 9. This company has a market cap of 399.53 crores with a dividend yield at 3.83% and the current market price at rupees 182.85. It had last year compounded sales growth at -20.54% and stock CAGR at -12.28%. However, profit growth and return on equity are positive. Its 52 weeks high low are at 218.74 rupees and rupees 94.50 respectively. Its revenue growth and net profit growth are positive. Promoter shareholding at 24.8% and there is no share pledging. Positives are very low debt, dividend yield is very good. Negatives are promoter holding is low return on equity. The company name is Century Anka. It is a Birla company having a strong foothold in the nylon and other polyester fabrics. It entered into the PPE segment in the last quarter. Century Anka website and its PPE product adverts can be seen. Company number 10. This company has a market cap of just 24.3 crores and the current market price at rupees 10.9. It has last year compounded sales growth at -30.82%. However, profit growth at 2% and stock price CAGR at 190.67%. Its 52-week high and low are at rupees 11 and rupees 1.7 respectively. Its revenue growth is at 25.8%. Promoters shareholding at 11.1% and pledged shares at 49%. FIIs are holding 1.2%. The positives for this company are free cash flow has grown considerably in the last 5 years. Return on equity is excellent. The negatives are the current ratio is low and 49.04% shares have been pledged. The company name is Vardhman Polytex from Oswald Group. It has entered into the PPE segment and informed the same to BSE on 21st May 2020. It has launched a new product line of PPE kits including antiviral, antibacterial masks certified by NABL accredited lab. They are manufacturing these items under the brand name of VSafe. Hence, I can conclude that Vardhman Polytex is a risky penny stock having some positive news. We don't know when it will translate to good numbers to appreciate its share price for fetching it to a multi-bagger status. With this introduction to the top 10 listed companies in the PPE segment, let us see the average of estimated CAGR for all these companies. Here the CAGR considered only in the period when this stock has performed well, assuming that due to some positive outlook on PPE sales, it may repeat the same price appreciation in the coming quarter. I will make another video on the CAGR estimation, which is not the topic of this video. estimated average CAGR of these companies has arrived at 112.7%. So if someone invests 1 lakh rupees, dividing rupees 10,000 spread across these 10 scripts, may get a projected return up to rupees 4,52,412 in the next 2 years. This estimation is assuming that the PPE market is going to grow big in the coming quarters. With the increasing number of cases, then this can be the estimated returns. And remember, investments in the stock markets are risky. You may lose your capital partially or fully, but if you are successful with this strategy, your returns will be higher than the bank F. Investing money into the markets has a high degree of risk, and you should be compensated if you are going to take that risk. Happy investing. Thanks for watching. I am new on YouTube. If you like this video, make sure to subscribe for more. I will see you again in the next video.